Hi friends. So I'm recording this vlog for the folks that new people and also the ones that watched my last two vlogs. So I received responses. I think some people are thinking that this is for the professionals only or big time money makers that I'm doing. But all the information that I'm providing here on the vlog is for all kinds of people, meaning lower income makers, higher income makers, mid income makers, doesn't matter. Everyone needs to think about saving and investing and in a similar ways, if you will, if you like. This is only my suggestion, right? But you can do however the way you want to save, and I'm no expert on this. I just want to let you know that no matter how much money you make, you definitely want to take the savings and investing a little bit seriously, especially if you're thinking about retiring, at some point, or if you are planning to work up until, who knows, right? You can, but everyone likes to take a break after working so long, right? There's so much battery charge you have, and you want to enjoy your life a little bit and relax a little bit towards the end of the when you get older. So that's why I want to make sure that these types of savings that I'm talking about, like checking savings, CD, 401k, and also pension. Somebody mentioned to talk about a little bit about pension. So any kind of and stocks and bonds and shares investment, all these things, it's for everyone if it's available. Some employers, right, don't offer 401k if it is a very small company or depending on their situation. Some don't offer pension. A lot of them don't nowadays. It used to be more employers offered a pension, but not all of them do now. Government employees, I believe they get it. It's called TSP for the federal government side. So with that being said, let me talk about a little bit further about the budget, like I mentioned in my previous money management vlog. Um, so the budget rule is 50, 30, 20, right? So 50 is for the needs of your life, like that living needs, right? So it's like, car payment, house payment, insurance, like, health insurance and car insurance, that type of thing, and food, that type of thing. It's like a necessity type of thing that you need every month, right? Every day, every week, every month too. So that is 50% of your income, okay? So it's like after tax income, not the gross payment, it's net payment. Then the 30 is for like to have type of thing. Like, that you want to order food from outside or like to go out a little bit, enjoy, and then, shopping that you don't need actually, but you like to do. That type of thing. And then they say 20% is for the savings. But if you can, what I suggest is reverse it. Make 20% for like to do things, and then 30% for savings, like savings and investment and all that. So that's where if you're making $1,000 a month or $10,000 a month or $20,000 a month, I'm talking about net income, or even $500 a month, right? Doesn't matter. Low income folks make lower money, so it doesn't matter how much you make, right? The experts say it doesn't matter how much you make. It's about how much you save. That's the important part. So no matter if you're making a million or 100,000 or 10,000, it's a year I'm talking about. Because entry level jobs, students, and then small jobs, they don't pay a whole lot of money. So it doesn't matter how much you make. The big thing is, the big thing that matters is how much you save. So the people that, you know that, right? When people make lots of money, they spend a lot and invest a lot and save a lot. But if you're making small money, then spend small and save small and invest small. So it's up to. So my point here is, um, whatever the amount you make a month, right? You plan your money, make the budget. You can do that according to the budget rule, 50, 30, 20, or according to your family needs. Because when you're making low income, right now I'm going to focus a little bit for the low income folks, because I think that's important to help them out a little bit, how to save and invest. So for the low income members or people, what you want to do is you want to write down what you make, right? And then you plan it. Like I previously mentioned, what is your income amount, and then what is your expense, right? What are the expenses you have? Then you categorize it, put say must have, like to have, and then saving and investment. Just three main categories. And then so put the all your necessity items, like I mentioned earlier, um, car payment, house payment, food, the important, most urgent thing, must have thing, put that in there. And then next thing is nice to have. So, I would, like I said, I allocate maybe 20% if you like to save a little bit money for the beginning. But as you make more money, you do more nice to have. That's my suggestion. That's my personal opinion. But if you can do whatever you like. This is just to help, for some of the folks that requested. So then 20% like to have, put that in that category. So itemize it. What are the things you want to do? You want to go out once a week, or eat out, or go for some kind of show, cinemas, movies, that type of thing, or a concert or something, right? So, and then 30% for savings and investment. So, with that being said, if you make, to make it easy for calculation, example, $1,000 you're making a month, right? So then 50% will go to the necessity stuff, must have, and then out of the 1,000, 30% will go to, so that means 300 will go to savings and investment. And then so that will be 50 plus 30 is 80, and then the 20% will go to nice to have. And then so that's $200, so $200 a month, if you can afford that, right? But again, you are the personal manager for yourself. I know that the low income folks manage their money very well, I think, because their income, all their spending, everything that they need to do for their family, I mean, on and spouse and the kids, all depend on that money. And so they watch every penny they make, how are they spending and everything. But at the same time, make sure you save. So you want to live according to what you make, right? And some people just live paycheck to paycheck. That's a mistake. So they say if you're buying a house, buy three times as you make. So for example, if you make 50,000 a year gross income, buy the house worth of 150,000, then your income will be able to suffice the payment, to make the payment on time without delays and problems. But that is just a calculation, right? But however you living, right, each person lives their their life very differently, because I know my neighbor doesn't live like I do. I mean, they're spending and they're living and what they need to have, must have, nice to have, and then saving is totally different than I do. I mean, no matter my coworkers, right, my peers and my subordinates, and then my superiors, they all live their life so different than I am. So it's up to every person is different, right? So and so you manage it, you kind of tweak a little bit wherever you need, from the 50, 30, 20. But my point is, no matter how much you make, you need to allocate some money for saving and investing. So that is the most important thing. Doesn't matter how much you make. It matters again how much you save. So that is the plan. That is the budget plan that I'm talking about. So I think that gives you some idea. But if you have any more comments or questions or anything, feel free to put it under the blog, and then I will respond back, or let me know, whoever can reach out to me. So the other thing is saving money. So the necessity stuff need to have type of thing. You have to pay. You can pay, I don't however you pay, right? Online or check or however, or credit card. Some people use credit card because they get points on it. So put that in checking, because you need immediate access. You need to do immediate transaction, as soon as you get the money. So, however, the money coming into the bank, you depositing the checks, or it's automatic deposit from the employer, however. So that's going to checking. And then savings, definitely open a savings if you don't have yet. Because in no time, when you start saving, in 1 plus 1 is 2, right? 5 plus 5 is 10, right? So money will add up, right? I mean, if you spend it, it will be gone too. So start a saving account. So the saving account, you can do online account, because some of the online accounts, that they offer more rate than local savings account. So if you check around, there are a lot of banks. I don't want to mention any names, because I'm not an ambassador for anyone, or sponsor for anyone or anything. So and I don't want to create any issues for anybody, or any organization. So I'm not going to mention any bank's name, but check around the local banks. The checking is for almost every bank is free, right? So I think you know that already. Savings, for students, they have zero balance account, right? And then, so if you want to open up an account for your, kids, daughters or son, even when they're small, you can open it up, and then, when, they get birthday gifts and things like that, cash, money, check, whatever, you can put it in that bank account and let it grow. Right. So anyway, that money was, given to them. So that's a good idea. So that way you're teaching the kids, how to save. And then have them take the ownership, have them watch it, give them the register, check register, and then have them balancing every time they get more money. They can see that, oh, my money is growing. They get excited. My kids did. And then with savings for the family or the individual, so open up a saving account with the highest interest rate you can find, or either online or local, right? And then start saving. Even if it's $5 a week, right? The extra burger you buy, the extra coffee you buy, start saving $5. I mean, 4 times 5 is 20, right? So there you go. And so even if you see, I have a great respect for the hard workers, low income folks, because I used to be one, right? When I got my first job, a very small job, and then part time in school, and then making, very minimum wage at that time. And then also my first entry level job, it wasn't so much, because back then it wasn't, people were not paying that much, but the cost of living was a little lower too. So I know I went through all these things and I experienced. That's why I'm talking about this, to help you out a little bit here. So however, $50 a month, if you can save that, put that in the savings, and then for the adults, if you're not a student, there's got to be some minimum balance in your savings account. That is a tradition and the policy of the bank. doesn't matter which bank. I don't know if any bank offers zero balance for the adults. So it's like minimum 500, some are 300, depending on which bank you're talking about. And then, so you make that minimum balance first and open up an account as soon as possible. And then every month, $50 or $100, $150 per month, you add to that account, and it will grow in no time. And at the same time, even if it's only 1% or 0.5 or 0.25 or 3% or 2.5 or whatever the interest rate you gain, it is also adding to your account. So in no time, right? If you're talking about 5, 10, 20, or 30 years, in no time the money will be like growing good, and you won't even know it. So if you could do automatic withdrawal, that's even better, to saving account, because, or CD, because I mean, it will automatically go there. You don't need to worry about manually transferring or putting it in the savings. So that is one way to do it. And the next thing is, once you have good amount of money in your savings, transfer that to a CD, right? So these are untouchable savings. You cannot just go in and take it. So that's where your budget comes. But if you have to take it, if emergency, something happens, you want to take the money, it's your money, you can take it. But I mean, what's the point of saving, right? So make sure you save it, for the rainy days. And then CD, once you have enough money to put in the CD, because there's a minimum balance for CD also, maybe sometimes 1,000 or sometimes 500, sometimes some people don't have zero, right? Some banks have 5,000, and then the more amount you put, the more interest rate they pay. So not so much, but still, it's something. So you want to open a CD, that's a certificate of deposit, which is like a long-term fixed deposit. That's what CD basically is. But I know in India they pay good interest rate, all the banks. But in US, the interest rate is is not that good, not compared to India. So, but something is better than nothing. So, and the other thing is 401k. 401k, some employers, if you low income person, your employer might not offer 401k. So, but don't worry, you can invest in stocks and bonds, and make money from there. But again, you have to do your research, make sure you learn, and make sure you're picking the right one. You can get some help from your friends or experts that the financial advisor, but nobody will pick unless some friends, right? But make sure they know what they're talking about, because some can lead you in the wrong way, have you pick the wrong one, and then you lose your money, right? So you do what I would recommend is, no matter who it is, if it is a student or old person or young person or no clue or about finance and accounting, right? I'm not a finance and accounting person. I am in IT, right? I'm an IT professional, but you can learn, right? You can learn anything if there's a will. So go online and Google it, and then start learning and start documenting it, so you have the history, right? Take a snapshot of history graph, the growth trend. It's all available online. So, and then you compare it. How did they do last 10 years? How did they do last 5 years? How did they do last year? How is company performing? What is a record saying? Are they doing good? Are they doing business now? And then what is their future plan? Working for you. You working for the company to make the money, right, daily, right, as you're working. But this money that you're talking about allocating into stocks, right, you're buying stocks of the companies or the bonds of the companies, and then that money is working for you. Okay, so you have to take it little bit more seriously here. So then it is fun. Once you start buying stocks, it's so exciting. And when you look at it, and you can look at the performance, right? And then when you see that it's making, wow, the growth is, you get excited. And then then it's just initial kind of hesitance going on there, and you get overwhelmed. But after that, once you see that you're making good progress, you get excited and start watching it, and then But once you pick, one thing is some stocks, right? Once you pick, you don't have to go and change it because they're really good, So just if it's good, it's performing well, don't change it. If it's not good, then move. But like one company that I like to mention, just to give you an idea, where you buy the stocks and things like that. TD Ameritrade, right? That is one of them. It's a common one. It's always you see on the TV. But there are so many companies. Do Google. And that will give you a list of all the stock brokerage and stocks investing companies that you can buy the stocks and bonds and start investing. So if you don't have pension, don't worry, right? Some companies don't offer a pension. Don't worry. Use 401k. If you cannot use 401k, you can do Roth IRA and IRA. So there's a limitation to it, right? There each year investment in Roth IRA or IRA, and also CD savings, and also if you want to buy stock, open up an investment account with one of the trade brokerage firms, and then to change your stock every day. You don't need to change your stock every week or month. Find some good company stocks and then you stick with it. And then bonds are like more safe and secure, but not so much of growth. So when you invest in picking stock, one thing I want to let you know, there are like a high risk stock where the growth rate is very high. So like about, who knows, maybe 10%, maybe even over 10%, right? And then bonds are very, very, very slowly growth oriented, that you can purchase, but it's safe and secure. So you want to have a mixed or balanced portfolio, like I mentioned. So then you can pick some bonds and then some stocks, right? And then, like I mentioned earlier before, if your company offers shares, it's a good idea to buy the company shares because you get it at the discounted stock price. So, buy it, let it grow, and go with according to their policy. I mean, I don't know if there's a cap or limit on how much you can buy and everything, but buy as much as you can because you're getting the discounted price. Okay, if I am buying somebody else's company's stock, it's more than their own employee stock if they offer it. So that's what that means. So those are the things I wanted to cover today, and I think I covered a couple of important points, and then so and good luck, but think about it, learn about it, start working on saving right away. Okay, thanks.